Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we're looking for a 3-wave A, 3-wave B and then a 5-wave C to the downside in a flat, after which we expect continuation to the upside. In this scenario, we aim to take the lows at least one more time over here with an ending a diagonal wave C. In an ending diagonal, all of the waves have to be 3-wave structures, a clear 3-wave structure to the downside here in a wave 3. We then want to finish an ABC to the upside in a wave 4 before moving down in wave 5 in another 3-wave structure. The main area of support below the low over here at wave 3 is the daily naked point of control at 54.4k, and the invalidation for this scenario is price hitting this 1-to-1 at 53.8k, which is taken from the high to the low of 3 to the current high of wave 4, because wave 5 is not allowed to be longer than wave 3 in a contracting ending diagonal. The invalidation of this scenario is also moving above the high of wave 2, as wave 4 is not allowed to move above that high. Finally, you can see the 2 line on my chart, the vertical line over here with the number 2, and that is a fib time taken from the start to the end over here of this first AB structure, comparing A plus B in time with wave C. And if wave C is longer than twice the length of A plus B, it significantly reduces the probabilities for this move to the downside to be a wave C. Now more locally, we are then looking for a 3-wave structure to the upside in an ABC. So in this case, we then have a wave A, B and a wave C. The 1.618 has been touched, taken from the low to the high of A to the low of wave B, which still is a common target area for a wave C. Moving above the 1.618 and going to the 2 and then the 2.618 does reduce the probabilities for an ABC and increases probabilities for potential wave 3s. We are currently at resistance, which is the white box over here, sitting between 63.8k and 64k, and above we have 65.2k and 65.8k. The resistance box above is quite close to the 2 trend-based fib extension, as you can see. And again, it's not an invalidation for a wave C. A wave C can sometimes be very, very long, but the 1.618 is still common, and anything after does lower the probabilities. If the high of wave C is in and we are looking for price to move towards the downside impulsively for that wave 5 in the ending diagonal, then more locally here we need to see one of 3 impulsive structures to the downside. Either a normal regular impulse 1, 2, 3, 4, 5, where we don't want overlap between 1 and 4, but at the moment there's a lot of overlap over here. We then need a potential diagonal because the impulse doesn't work, which means you're going to be looking for something like this, where we have a wave 1, 2, 3, 4, 5, but it is too early to call, as I only like to talk about diagonals when a wave 4 is in. And then we have the double 1, 2, where this is a wave 1, 2, 1, 2, and then we want to see continuation to the downside. Now this still has potential, however moving above these highs here will reduce the probabilities for a double 1, 2. Now at the moment you can also see I have the 0.618 on my chart. This one is taken from the low over here to the current high that we have, because if this is an impulsive structure to the upside, we are looking at a potential double 1, 2 over here, 3 to the upside, and then eventually some 4 and 5s, creating higher prices. And also the volume in this local trend towards the upside is currently the highest in the final 2 candles, which is a signal for a wave 3, and therefore we want to see a wave 4 and a 5, and the 0.618 is an invalidation for a wave 4. So the moment the 618 is hit before at least making another local low, it increases the probabilities that this is a corrective structure to the upside, and therefore it increases the probabilities to take this low. On the 4-hour time frame, the bullish scenario is a bigger 3-wave corrective structure in a WXY, after which we expect continuation to the upside, currently inside wave X, looking for a 3-wave A, 3-wave B and a 5-wave C to the upside to create an expanding flat. Most common target for wave B is nicely respected, and the impulsive wave C, 1, 2, 3, 4, 5, needs to end above the high of wave A to create that expanding flat. And we do have some resistance towards the upside. So we have, first of all, the box I mentioned, 65.2, 65.8, and then the first box above wave A is 68.2k to 69.2k, after which we want to see a drop to the downside in a wave Y, either in a zigzag, most common, a flat structure structure or potentially a triangle, but the triangle is the least common structure in a wave Y. As long as price didn't take the high of this wave A, the invalidation for this scenario is the low at B at 56.5k. More locally, we are then looking for an impulse to the upside instead of a bearish A, B, C. And here we then have our wave 1, 2, 3, looking for 4, and then a wave 5 to the upside. Common target for your wave 4 is between the 236 and the 05, taken from the low of 2 to the high of 3, giving you a target area between 63.2k and 61.7k, with the invalidation for wave 4 being the 618 at 61k. However, moving to the downside and potentially hitting this 618 invalidation then doesn't necessarily mean we gun for the lows, because there is the potential you have a finished 5-wave structure here, 1, 2, 3, 4, 5, finished at the high, and this is a corrective move to the downside, but it very much depends on how price moves down, because if this is a finished impulsive structure and your wave 5 moves over here and we are looking for a corrective structure to the downside, we want to see, as mentioned, corrective moves. The moment we get a potential double 1-2, let's say, and we move impulsively to the downside, then the probabilities are higher for the diagonal scenario to take the low. So actually, if we do move down, the structure of the move towards the downside is going to decide the probabilities of taking the lows, or a finished impulsive structure looking for a 2 and then a wave 3 for continuation. But at the moment, as it stands, I prefer to keep an eye on this scenario here, wave 3 moving to the 1.618, common target for a wave 3, looking for then a 4 and eventually a wave 5. At the same time, if price does hit the 886 taken from the high to this low over here at 64.4k, it will increase probabilities to take the high over here and look for upside, where then the target area mentioned before just above price is going to be interesting resistance for a potential wave 5. Locally, we had some bullish CVD divergences on the chart, higher low in price, lower low on the CVD here, as you can see on the yellow line, higher low, lower low, but this now played out as price took this high over here, and currently very local, it is completely neutral, so we have to just wait and see and give price a little bit more time. And if we then look at the probabilities of the different scenarios, then on the 1 hour and the 4 hour, the probabilities from an Elliott wave point of view are neutral. We are just keeping an eye on the local price action, which is the 15-minute price action. So if price can move to the downside and hit the 618 at 63.4k without making a local new high, it increases probabilities to take the local lows, and then depending on the structure to the downside, we can increase or decrease probabilities for different scenarios, either a wave 1, 2, 3, wave 4 and 5, but that means we want to see corrective structures to the downside, not impulsive. And if the 618 is hit, then we're going to be looking for either a finished wave 1, 2 and 3, but that means we need a corrective 3-wave move to the downside, or a finished ABC, and then we're looking for an impulsive structure to the downside to take the lows over here at least one more time. Hitting the 886 at 64.4k over here increases the probabilities to take this high, move up, and then the next resistance box is at 65.2k to 65.8k. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.